Hello traders! In this video we will cover the worst trading mistakes which caused a high number of traders to fail. And if you are going to repeat these mistakes over and over, you will probably not make it in this trading industry. All serious traders who trade capital for our crypto prop trading firm has eliminated these mistakes early on, which allows them to get funded and trade 5 to 6 figures hero trading accounts. So if this is something which interests you and you want to get funded, click the link below this video and get funded. Martingale. This method is known from the roulette players, where they are betting just on the red or the black. So basically, if you're getting lost, you double your bet every time. It can work for some time, but imagine that you have to double 5 times, right? So for example, if you're betting just 100 on one bet and you lose, the next bet has to be 200 and another bet 400 and then another bet 800, right? So it's just a question of the time until this stops working. Okay, so now let's take it to the trading. So imagine you have your strategy, you know your win ratio is good, you're winning, and then you want to improve it by using the martingale. So every time after the loss, you double to get out from the loss much quicker, right? So it can work for some time, of course, but imagine if you have to double 10 times, you are almost risking your whole account, right? So it really doesn't work to use this strategy in a trading. It's for the gamblers in the casino, not for the traders, okay? No stop loss. Alright, this is a usual hack after seeing your trade being stopped out and then going your direction, right? You maybe start to thinking, alright, what if I remove my stop loss and then all these trades would be profitable, right? When the traders are in this period of the frustration, they start to doing these really big mistakes, right? So it can save you sometimes and it makes you profitable for some time, but remember, we are in the crypto trading, right? So market can pump, right? And one day this can cost you much more than getting 3 losses in a row, right? So don't be gambler, always use stop loss. In the fact, using the stop loss doesn't mean that you are completely protected, because in the big crash or in the big pump, when the price goes sharply through your stop loss, you will probably get the slippage by your broker. So that means that you will not be filled on your requested price, but still it's better to have stop loss with the slippage than no stop loss. Being influenced by others, this is very difficult, especially for the beginners traders, right? Because you're seeing these social media gurus, these gurus traders, they posting their trades, you know, their profit splits, the houses, the cars, expensive, all of this, and then you doing your analysis. So you, for example, create the analysis for the long idea, and then this guy who you are watching on the social media, he posts the analysis for the short, and he has thousands and thousands followers. Then you start thinking, oh, he must be right because he has more followers than me, you know. But no, don't do this. This can work for you for some time, but even if he is right and you are wrong, trust yourself, and you are doing this for being independent, not being dependent on someone from the social media. Take responsibility for your trades, rather be wrong, and then learn from these mistakes and develop further. This is the only way how you get improved in the long term and not being dependent on these social media gurus, and these traders. Maximum risk per trade. I would say this one is the most important, crucial aspect of the trading, and especially in the crypto prop firm trading. Standard in this industry is 5% loss in a day and 10% loss for the whole account. This is what's allowed. If you breach it, you are basically done, right? So again, I don't think that we are gamblers and we are in this industry for the long term. So we need to have a room for being wrong. So imagine if you risking 2% per trade, that means that if you are 5 times wrong, you basically done, right? So do you want to bet your trading career for the 5 trades? I would not. I would give it a little bit more room and I would adjust it to my strategy, to my win ratio, to my risk reward ratio, right? So 1% per trade, it allows you to be 10 times wrong in a row, and 0.5% per trade, it allows you to be 20 times wrong, right? So it's really important to know where is your strategy and your risk staying, and then adjusting risk per trade, right? Definitely, I suggest you guys don't take more than 1% per trade. It gives you more room, less stress, and more ability to be wrong. Okay, as you can see, all these 4 sins mentioned today are just a short-term solution how not to get lost. But as I say, short term, because it's short term until you get one big loss, right? So imagine you save some losses from the removing stop loss or using the martingale, but once you get the loss from the martingale or loss from not having a stop loss, you are completely done, right? So this is trading, not gambling, and I suggest to avoid these sins. Alright guys, so that's a wrap. I hope this video helped you to get inspired how to avoid these mistakes, and if you like this video, please hit the like, subscribe button, and I see you in the next video. Wish you happy trading guys. Take care.